I understand your model of trying to get more people, more democratization, but that means that there's now greater responsibility of ensuring that your customers have all of the information they need to access riskier trades. Now, for me, the information that has to be digestible and accessible. Now, one of the problems I have, for example, you're allowing up to $1,000 to buy stocks on margin, and borrowing on margin is risky. So how do you disclose this? How do you make determination of individuals who are not the sophisticated investors and allowing them to buy these risky stocks that are on margin?
Thank you, Congressman, for the opportunity to address that. Let me set the stage a little bit by saying that about 2% of our customers borrow on margin. About 13% on a monthly basis perform an options transaction, and a much smaller number, around 3%, perform a multi-leg options transaction. So the vast majority of our customers are engaging in buy and hold activities and long-term investing on our platform. Now, to clarify your point on the $1,000 margin, that's actually something that we refer to as Robinhood Instant, and it's provided as a courtesy. When a customer initiates a deposit, we allow them access to up to $1,000 of that deposit immediately, similar to how if you deposit a check at a bank, as a courtesy, they might provide access to those funds or a portion of them before that check clears. As for margin specifically, borrowing money on margin, the rules are very ironclad industry-wide. Obviously, Robinhood Securities conforms to all of the applicable rules. And Robinhood's product is in many ways more restrictive than that of our competitors, because in order to even qualify for borrowing on margin, you have to be a Robinhood Gold customer, which involves paying $5 a month for the service.
So I think that you say that everything is restrictive, but when you are going after the less sophisticated investor, it's more than that. There's a greater responsibility that you have, because they could lose, and when they lose, it could make a determination of whether or not they can pay their mortgage or their rent or not. And they can be taken advantage of. Oftentimes we find in the financial industry, it is those that have the least that are really taken advantage of. So the big guys, it becomes a reverse Robin Hood situation, which really concerns me. Let me get to this real quick, because there was just something else that you said in regards to liquidity. And you said that you didn't borrow the money because you needed it at the time. But that then you later in a question you asked, that you raised the additional money, because I want to know how you spent the money, for future situations, which means to me that you did have a liquidity problem, or you anticipated possibly having a liquidity problem, or would have one in future transactions. What's the deal there?
I appreciate that question. I stand by what I said. Robinhood was able to meet our deposit requirements. We were in compliance with firm net capital obligations throughout the period. And that additional capital, the $3.4 billion, wasn't to service our requirements. It was entirely to prepare for a future, even greater black swan event, and to unrestrict and remove restrictions on the trading and buying of these securities.